This whole pattern fits the classic textbook definition of a bear market rally, or what we often call a relief rally. It's a temporary jump in price that just can't manage to break through key long-term resistance. And by definition, a rally that gets stopped cold at a ceiling we already knew was there, well, that doesn't signal a real reversal in the trend.
So let's talk about the level to watch, the path to a bullish confirmation. What does this all mean for you as an investor or an analyst? Well, it means we now have a very clear, data-driven level to keep our eyes on. This is the level that's going to tell us if and when the trend really starts to shift back to being bullish.
Which brings us to the big question, right? What would it take to signal a genuine trend reversal? What would have to happen for us to say, okay, this isn't just a relief rally anymore?
The answer is simple and it's precise. $94,000. That is the line in the sand. For the narrative to change, we'd need to see a clean, decisive break and, this part's important, a daily or even weekly close above that level. If that happens, then Bitcoin finally has the breathing room it needs to start tackling those other on-chain resistance levels and begin rebuilding a truly bullish market structure.
And really, that brings us to our final thought, which is summed up perfectly here. Price looks alive, but the market still needs proof. Look, this recent bounce was absolutely important. It showed us the price isn't dead, that buyers are there, and they're defending key levels. But until that critical $94,000 resistance level is broken, the market is still asking for proof. And until we get it, this move has to be seen as relief, not confirmation.